You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Where are you speaking to us from today?
Not quite sweltering Florida. It's getting a little hot here for the end of May. And since the temperature goes up 1 degree for every 4 days now, 5 days, it's going to be, from this point forward, pushing into the mid-90s. And the humidity wasn't quite there today, but it'll be here soon as well. So anyway, that's the situation in sunny Florida.
How long do you think the current rally in the stock markets will last, and will they hit new record highs?
Well, I had a really good call when it collapsed back in early April, and it came down. There was quite a bit of panic in the air, and the market got hit really hard. But when it got hit hard, it came down precisely, or almost precisely, to a 48.20 target that I put out for the S&Ps. And because it bounced from there, I thought, well, let's take the forecast a little farther and just say that that low ended the bear market and that the U.S. is not going to have a recession and the tariffs are going to do no lasting damage to the global economy. So I doubt that now. I mean, even though we've had the rally that more or less vindicated my initial forecast, and with the S&Ps up almost 1,100 points from where I said the turn would occur, I guess I should be celebrating. And I did say that I would leave the essay, my commentary on my homepage that talked about that up till the market proved me wrong, and it certainly hasn't done that, but I'm going to get a little bit ahead of it and say that the market is very close to a top, and it's going to happen without having made a new record high.
How do you think the U.S. economy is reacting to tariffs and trade wars?
Well, it's interesting. It's sort of a mixed picture because we're booking revenues from these tariffs, and I guess Trump has said that he's going to keep a baseline tariff of something like 10%. And we do have reports from the Rust Belt that they're reopening certain factories, auto assembly plants, and things like that, because it's just harder for companies that are importing foreign parts and things like that to do it that way. It's easier to just reopen a rusty plant here, and that's going to happen. I think it's really a good piece of Trump's plan, but I wouldn't count on any immediate. You'll see some successes, but of course the bigger process of bringing manufacturing back to America is going to take a long time, and it's going to be very expensive in terms of what consumers pay to buy things that aren't quite being manufactured in quantity here. There's still a lot of stuff we buy from China, pretty much everything. So that doesn't get sorted out overnight.
What's going on with gold?
You got to love gold. I loved it up till I had a target when gold was trading around $2,750. I put out a target at 30. Let's see what it was. I'm getting the big numbers mixed up, but I put out a target around. This would have been basis to June COMEX around 35.33. And it got to 35.10. That missed by about 0.6%. And I expected the target to be important, and I thought gold would correct. And it's done that, and it's been a pretty good correction. It got people talking about how maybe 2,500 is the right price for gold. But lo and behold, we had a very, to me, technically meaningful move today. I had, as this corrective move from 4,500 plus was unfolding, I put out a target last night at, let's see, it was 3,100, and let me see if I can find it on my Yeah, the target was at 3,147.70, and lo and behold, we made a somewhat lower low. We got some good trades off down at the bottom though, getting into good positions, and we had a 110-point rally off the bottom. And basis the June COMEX, it's finishing the week, the day. I mean, at let's call it $3,250. But if it continues to move higher and pops above the magic number is 3270.40, $3,270.40. If it gets above that, I think it will answer the question of, is this move in gold, the down move, going to continue? Is gold, have we seen a major top? I don't think so. And part of the reason I don't think so is that Trump's plan to remonetize American assets, which includes gold, needs gold to be at $5,000 or above. That's where gold's supposed 8-ton hoard of Fort Knox gold becomes a significant part of Trump's remonetization plan. So even though my bearish outlook on the economy and the stock market now comes in part from the fact that Trump is just not big enough to bully the bond markets, he can certainly affect the gold markets. He's got a lot of friends in high places, a lot of sleazeballs who have been manipulating gold for a long time, and their manipulations have had to some extent kowtow to the fact that every sovereign entity on planet Earth is buying gold right now. So it's really hard to keep it down, even though those same sleazeballs will attempt occasionally to shake gold down so that they can cover short positions and accumulate a little bit at, if not fire sale prices, certainly bargains compared to the recent highs we've seen.
How come silver hasn't participated in gold's major rise?
Because the action, I just mentioned that it's the sovereign entities that are doing the preponderance of buying, and they don't really give a damn about silver. They're not speculators. It's, I guess, the institutional character of gold's rally, the force of big banks and big financial interests that's kind of shut silver out. Silver is the Joe Sixpack's choice. It's cheaper to buy than gold. You can get, I'm not sure what a bag of junk silver would cost now, but it's just a poor man's approach to preparing for the worst. So there's not enough. Silver it's been anomalous itself because there has been tightening in physical silver supplies, or tightness, for quite some time, for years actually, and at times it's gotten pretty critical. You could be ordering silver rounds or junk or silver ingots, and delivery times have really extended out to the ridiculous. So everybody knows that there's more demand for physical silver than there is supply, but in the bigger picture, the global investment scheme, it's gold that really has the attention of the big guys.
On the crypto front, is Bitcoin overvalued at over $100,000 again? Not
on a purely technical reading. I have charts. I have a Bitcoin chart, and I think my current target is up around 130,000, but there are some conditions there. So Bitcoin has tended to be kind of a go-along speculative vehicle. It's no longer got quite the enthusiasm pushing it to lead the market higher, but it's been a good go-along speculative vehicle. So it's kind of meandering. It's flip-flopping in the 103, 104,000 area. And I think the next push on a purely technical basis, would take it up to around 116 and thence to 130K. But we won't necessarily get there, and we surely won't get there if the stock market tops about where I think it will. And we're not too far from that. So Bitcoin may never get that additional push to break out above the recent high at, let's see here, at looks like just below 106,000. Currently trading just below 104,000.
We'll have more with Rick Ackerman right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what's going on with crude?
Crude, as we've discussed before, is really in a funk, and it is maybe even better than copper, reflecting the fact that there's no great strength in the economy. China has very significant problems now, unwinding a speculative frenzy, and I speak of a frenzy that took place over many years. A lot of it got shot in real estate, but China, as the marginal buyer and pricer of crude oil, has been weakening. And right now, based on, we had a recent low down around 56. This was basis the June NYMEX contract. But as I look at it now, currently trading close today, $61.72. But if it takes out that low from a couple weeks ago, around 56, I think it's going to go down to at least 52.05 if you want the exact number. And there's potential for crude to fall as low as $47.78. So it's easy for me to foresee crude dip below $50, and it might not even be a dip. So that's obviously good news for consumers, for people who use, all of us really, we consume fuel, and it's not, well, I'm not going to say it's not good news for the dirtballs who control the price of crude. Crude is the largest commodity market in the world that's fully rigged. It's 100% rigged. It's just a game. They just run oil up and they bring it down, and there's a lot of trading, but it doesn't really connect up with the economic picture. You can't really put the moves in silver in the perspective of the economy. When China's economy firms, then you're definitely going to see crude moving higher, but the world is kind of in a, let's say, a state of delusional flux where you could make the case that the global economy isn't getting any worse, although it is in Britain. And there's some cracks showing up in the U.S. You know, the boast was that the 10-year auction last week went off pretty well. But the fact is, if you look a little deeper into the auction data, you discover that we really have the Fed has evidently begun quantitative easing. So they're doing that in their sneaky, sleazy way, and it kind of masks certainly the Fed's fear that there really is weakness in the economy that they think they should address. So where crude is concerned, yeah, I could see prices going below 50 and we'll be back to $2.25 at the pump, which is not a bad thing.
Was the Fed right to hold their interest rates at the same rate?
Was the Fed right to hold that? You know, none of that means anything to me. I know the whole world kind of watches the Fed, and you do have to go with the flow there. But the whole sort of Kremlinology about will they or won't they and what they do and what's it really mean, I try not to get into that. I just I look at all of my own indicators, but as far as tightening and loosening, there's not really a clear enough picture of the economy for anybody to interpret tightening and loosening as having a significant benefit, or even for that matter, a possible harm to the economy. It's like, who knows right now whether tightening or loosening is going to achieve anything.
Is there anything else you think we should be keeping a close eye on right now?
Well, when we've talked about that in the past, I've liked bonds because bonds have been so out of favor for so long. And it's a difficult read now. On a technical basis, I'm looking at charts and thinking, geez, this rally, the recent rally could be for real. But on the other hand, I just don't see borrowing getting easier. The Treasury has so much, I think it's $9 trillion of paper to roll in 2025. So the federal government is going to be in there in a big way. And I don't see much relief for interest rates. And it's kind of trapped the U.S. into a bind. I guess it was Trump's hope and the hope of all the banksters that $9 trillion could be rolled at much lower rates than we're evidently seeing. But as I mentioned earlier, the bond market is too big for Trump to wrestle to the ground. It's just a huge creature. It's not so much out of control as being controlled more genuinely by market forces than we're used to. So as far as what to buy, I think gold is definitely part of that strategy. And I hesitate to... GDXJ, which is an ETF proxy for the junior miners, has moved pretty nicely. It's had a good move. But in a way, the whole mining business has come to be, it's almost like it's doing the silver thing. It's the Joe Sixpack is not yet enamored of silver, of mining companies. So mining shares, I know them to be hugely underpriced because I used to do these trips with Al Carlin and a bunch of guys. They were mostly interested in mining investments, and you could tell there's a lot of companies that are sitting on proven reserves and they're great core samples, and you know that the metal is there. There's a lot of bullion underground, but it's the real values have yet to be reflected in mining shares. So anyway, physical gold or let's say the best paper gold equivalent, and for better or worse, treasuries. There's so many things pushing treasuries hither and thither that you really can't say other than by looking at a chart where it's going.
Rick, thank you so much for chatting with us.
You're most welcome, Jim. I always appreciate the opportunity to get on board with you and just reach your vast audience.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He was speaking to us from South Florida. If you have any questions for Rick or for any of our guests, you can send them to info@howstreet.com and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on X @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.